Hi guys, how are you? This one Titanium, founder of Investing MMT and the co-founder of Pure MMT for the 100% Beyond the Memes, along with my friend Edward Delzio, who is the author of The National Debit, a must-have book for anyone who wants to understand the monetary system and macroeconomics. I also run a Patreon page for $5 a month, mostly to keep the trolls out, where I teach people in real time how to understand macroeconomics, how to apply it into the real world, and how to apply it in investing. So come on down and join us on patreon.com/mindthisone. It's only $5 a month. We also do chats on Facebook Messenger throughout the day and talking about markets and economics and so on. Okay, so it's been a while since I made a Bitcoin video. I've been in the process of moving. So I haven't had time. My computer's back up and running, and I'm going to give you an update on Bitcoin. I'm going to use bare knuckle charting. That is my style of reading charts, and I am a big believer of Occam's razor, which the least information with the least amount of assumptions is usually the correct answer. And with that in mind, I've developed bare knuckle charting, which kind of looks similar to Elliott wave, but it's not. Okay, it just has to do. Think of it more like fractals, where just there's patterns, instructions, and waves that are repetitive throughout time. Now, I also use that information to, along with macroeconomics and MMT understanding, and apply the two to gain a result of what is likely to happen next. Now, obviously, in Bitcoin, I cannot use macroeconomics because it's a Bitcoin, right? It's a con. There's nothing behind it. There's no value behind it. It's just, can you find enough people to pay a certain price out of 7.4 billion people? And the answer, obviously, is yes. You can always find people who are just going to run into something that is just going up, thinking that it's just going to keep on going up forever. But that's not the case, as history has taught us. So one such example of bare knuckle charting is just to look at the structure and the way it behaves, how price action behaves, and as you can see here, we have the Eiffel Tower structure that is playing out as we speak. Now, one second. Now, the important thing is that you never know if it's actually going to play out. So you need always more information, more clarity, and then you can go from there. But what is definitely very similar is the drop, the bounce, and then another move down. Okay, so this is what I call an M pattern, where it just breaks apart, falls below, and then just collapses. That's the Eiffel Tower. That's usually the way it works. Now, it doesn't do it in one day. It doesn't do it in an hour. Usually takes days and weeks for it to develop. In some cases, even months. So when we take a look at Bitcoin or Bitcoin, what you'll see is a very similar structure. It goes straight up, comes back down, it makes a lower high, and then it comes back down again. And then if this is going to play out as we think it is, then the whole thing just falls apart. Okay, and then comes down. So let's take a look at the chart in a log. Okay, it looks a lot different in a log because the price action is so great that you can only make good analysis based on log charts. Now, to an untrained eye, this just looks like a chart going from the bottom left to the top right. Everything is good, that's good to go. But you would notice that you have a very large price fluctuation. So, for example, if I were to measure this, you would see it's about a 43% decline. Okay, that's a very big move. But on a log chart, it doesn't appear so. So the other thing is you can see how the waves have produced, what it looks like, what the structure is. It was a rising wedge. It broke out. Now it's creating this consolidation above the structure, and this is a daily chart, obviously. So you can start to analyze once you've trained your eyes your brain as to know what you're looking for, much like a chest X-ray. Okay, to a trained eye, they can see what's going on. So we're applying the same method here. Um, it's not something that you think you can learn in a day, in a week, or a month. It takes, in some cases, years to really train your eye to understand what is likely to happen next. Trading is not about guessing, okay? It's about knowledge, and it's about what is likely to happen, okay? If an incident like 9/11 occurs tomorrow, there's no way for anybody to know. The market is going to react a certain way, okay? So always, it's what's likely to happen. Now in Bitcoin, we don't have the benefit of macroeconomics to contrast the charting with, so it's a little bit more difficult. But nonetheless, as you've seen my previous videos, they've been pretty much spot on, okay? And they've worked out as we expected, and now it's continuing to work out as we expected. So let's zoom in a little bit, okay? Now, we broke this structure going upwards, came down, and we had this structure, okay, where we expected it to come down and then bounce from there and go higher. That didn't happen, okay. Instead, we got another structure. We got this, okay, and then now we're coming back down and we're creating consolidation here. This is bearish, okay. You see it's starting to create that pressure, that consolidation. Eventually, when this breaks, okay, it could break either way, higher or lower. When it breaks, it's going to have a violent move down, just the way it is. Now, one of the mistakes that people make, especially my subscribers, early on, is they keep moving this trend line all the time. They just keep moving it as if it means something. You can't do that. You have to maintain what was previous. See, previously I had this drawn out, and it was potentially going to rise to the top of the trend line before it reversed. If you look at my previous videos, that's what I was considering. But now that we've had the full hook reversal, now I can change it. Okay, so now it looks like this. All right. So this is the way structures and waves, or waves and structures are formed. You get always a 3 and more often than a 5 wave. Okay, so what is a 3 wave? So you would take the lowest low from this move, this thrust down move, okay, and then you would count 1, 2, 3. Once 4 points are created, you have a structure, which is a move that is going counter to the initial thrust down move. This is usually bearish in of itself, okay? So what typically happens is it starts to fall apart, and then it creates a 1, 2, 3 down. Now, can we get a 5 wave? They are less, they're more rare, okay, the 5 waves, but it is possible that we could get one more up and then fail. That is possible, but the likelihood is that right now we have this consolidation in here, and that pressure, the initial thrust was down, so likely it's going to go down once more. And usually it likes those round numbers of around 10,000. Okay, now once something breaks a structure, okay, what it does is whatever was up here is going to end up being down here. So since it exceeded this structure, it's going to exceed this structure, this bigger structure, to the downside, which is this. Okay, so we're bearish definitely on Bitcoin. Doesn't mean shorter term it cannot go higher. As I mentioned, it is possible that it could make one more up to the top of here. Okay, that's possible. But right now, we're not looking at that. Right now, we're looking at this consolidation. All these people in here that bought are underwater, and these guys are not professionals. So if this starts to break down, they're all going to puke it. They're all going to start barfing. And as somebody mentioned, a lot of these people, they went out, put it on their credit cards, gambling with their kids' college money, took a home loan or do what, a lot of crazy shit. Um, so believe me, they're not gonna hang around watching thousands just go bloop 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 out the window. They're gonna sell. Now, if you guys were on my Patreon, I was posting charts. Even though I didn't have access to my computer, I was posting charts from my smartphone, and I said that there would be a consolidation down here that would form. Okay, so it was going to go up. We were bullish so long as it remained in this consolidation. Okay, now um, what is difficult about this kind of consolidation is that every time it comes back into structure, there's that likelihood it's going to do that wave 4 and then 5 down. So you might get one more up. All right. If it's below, let's say it was consolidating below the structure, then it's an easier trade that it's going to go to the downside. Okay. So right now it's just fucking with people, going out of structure and back into structure, in structure, back out, and you're just sitting there like, freaking out. Especially if you don't understand structures and waves and price action, you're going to be freaking out. Okay, and every single move up or down is going to be significant and but there's no need for that. There's definitely no need as long as you have knowledge. And to gain knowledge, you have to join my Patreon for $5 a month. Alright, so let's zoom in now. We're on 1 hour. And remember that you always count waves from the previous low, which is this one. So if I were to count it from there, then the first wave would be up here, this one. Okay, this would be a 1. This would be a 2. So we have the 2 points on the bottom. Alright, let me just draw it out here for you. So we have this point right here, and this point here. And now we're waiting for 3 to end. We never know when a wave is going to end. We don't know if this is just going to continue going straight up. Okay? You have no idea. You can't know that. But if it were to come up here, let's say, arbitrarily, that it just comes up here and starts to reverse and hook over, okay, then your risk reward is very nice because you can take a short somewhere in here, okay, and wait for this move. But you'll be at the top of the structure. Okay? This is the best risk reward point to take a short. If you want to be a little bit more cautious, then what you could do is you can put a short down here. So once it breaks, you can capture it and then it just keeps going down. If it comes back into structure, you got to stop out. Okay? And that's what bare knuckle charting does. It gives you very nice risk rewards when you should take the trade and when you should not take the trade. Okay, when you should wait and be patient, and so on. Now, I typically don't like to trade small time frames, okay, because they're very irrational. They just move a little weird. I like the bigger time frames. So when you take a look at the evidence that we have right now, and I take off log and I take off all the drawings, what we have is the Eiffel Tower structure. Okay, that's paramount. That's big picture stuff. The likelihood is, because it never completed a wave 3, which is a 1, 2, and we're looking for that 3 wave. Okay, the likelihood is at some point it will complete the 3. Once it completes the 3, then you can start looking for upside. There is a 90% chance this is going to occur. Okay, this is going to happen. Now, is it going to start from here, from here, from here, from here? I cannot tell you, but this is about $3,000-4,000 worth. Okay, so you got to be patient. You can't just say, okay, Nick said this 90% chance going to happen. Yeah, but it might take a month before it happens. It could just continue to consolidate. Okay, it might take 2 months. It could just do this and then fall apart. Are you going to hold a loser, for that much time, especially in something so speculative as Bitcoin? That's difficult. So the difficult part for young traders is, one, that they are very anxious They can't read a chart. They're very anxious. They try to overanalyze every single tick up or down, and then they just take bad trades at bad locations. And then if they don't scare them out, then it's going to be, they're going to be worn out, waiting for that drop. And then as soon as they get blown out, guess what? The drop is going to happen. So you don't want to get yourself in that situation. Okay, you need to be patient. So for now, the next couple days, what we're going to want to see is, where does this wave end? This move right here. Okay, whenever it starts to hook over, okay, and then I'll probably make another video, and then we're going to look for that thrust down move. All right, so it should happen by maybe the end of the week. So that's it. That's what we're looking for. This is the likely outcome. This line you can disregard. It's just arbitrary. I just put it up there. But let's just see where this wave ends, right? And then maybe it'll give us a structure like this, which is, of course, bearish. Okay. Remember, the market is always going to deke. It's going to show you one way and then do the other. So that's just the way price action behaves most of the time. Once it does break, where are we looking for it to start to bounce? You want to see that if it starts coming inside this structure, okay, the bigger structure, then the likelihood is it's going to have a much deeper correction. All right, but the first target is going to be the previous low here. Okay, maybe break it and then reverse back up. Okay, that's the first target. If it doesn't do that and it does some kind of consolidation here, then it will continue down much lower. All right, and then this would be the second target. That's it, guys. I hope this helped you out a little bit. Go back, look at my previous videos. You can see all my calls, and you can judge for yourself how bare knuckle charting works. If this is something that you're interested in learning, along with macroeconomics and how to apply them to the real world, come on down. $5 a month. Like and subscribe. MMT and IMMT. And I think you're going to find it very useful. And don't forget to buy the National Debit. It's a great explanation of how the monetary system works. And much appreciated. Thank you. I'll talk to you soon. Bye-bye.